Welcome to the Maryland Mortgage Rate Weekly Market Update for the week of January 12, 2015. Hello, I'm John Thomas here to give you your update. Last week was good for the Maryland mortgage rates. They did move lower. But if you look at the bond chart on the screen, you can see the bond was moving higher. The trend has been for it to move higher, but then we hit that giant ceiling resistance, that blue line. We hit that previously and sold off. Same thing happened again. That's a tough ceiling of resistance. So even though Maryland mortgage rates did move slightly lower last week, we're going to recommend locking your Maryland mortgage rate because that's going to be a tough ceiling of resistance to bust through. So in the short term, take advantage of these record low rates. Lock it in. Long term, if you're closing 60, 90 days, new construction, we could see the bond make another run at that blue line. If it was to break through that, we would see rates definitely move lower. But right now, lock it up. Take advantage of these record low rates. Now, if we dig into the economic news, last week, big report, December jobs report released by the Bureau of Labor Statistics showed 252,000 jobs were created in December. So that was a good jobs report, right about expectations. Now, if we look at the whole year, 2.95 million jobs created in 2014. That's up from 1.95 million created in 2013. So a very good labor market recovery in 2014. And then also in that December jobs report, we saw unemployment dropping from 5.8 to 5.6%. So that looks good on the surface. But if we dig into the report, the labor force participation rate actually dropped 0.2% to 62.7%. So what that means is the unemployment dropped not because people are going back to work per se, but because 300,000 people actually dropped out of the workforce, no longer counted in the unemployment rate, but they're showing up in the LFPR. So that's not great news. We need people to go back to work, so we need the unemployment rate to go down because people are working, not because they're just stopping looking for work and dropping out of the workforce. So we'll have to keep an eye on that. Then we saw other economic news. We saw price of oil drop to about $48 a barrel last week. That's almost cutting the price of oil in half from the peak. That is insane. Prices at the pump definitely going lower. So it seems like good news on the surface. But if oil stays low like this in the long term, it's going to be bad and a drag on the U.S. economy because 40% of jobs created in this recovery are in the energy sector. And U.S. oil production is not profitable at oil at $48 a barrel. So if the price of oil does not go up long term, we will have a bad negative effect on the economy. And then Thursday, we saw the release of the weekly initial jobless claims. Came out 294,000 claims, a drop of 4,000 claims from the previous week. And that's the 15th week of the last 16 weeks that jobless claims have been below 300,000. That is great news for the labor force recovery. And then in housing news, we saw CoreLogic release their home price index for November 2014. It showed home prices increased 0.1% from October 2014, and they're up 5.5% year over year. So if you look at that chart on the screen, you can see that's a drop from the February of 11.7% down to 5.5%. Now that's not bad news because that 11.7% was not sustainable. 5.5% is right about the historical average of 5%. So that is good news on the housing front. We are seeing home prices appreciate. The prediction for 2015 is home price is to increase between 4 and 5%, depending on who you ask. And then what happens to mortgage rates in 2015? Well, the prediction is they're going to stay low. Couple of reasons. One, job report we just talked about showed no wage growth. Actually, it was a slight negative wage growth. So that means there's going to be no inflation in 2015. No wage growth, no inflation. And then if the feds don't raise the short-term rates, which they're not going to do without inflation hitting 2%, we're going to see mortgage rates stay low. And then we had a huge update from FHA. FHA released mortgage letter 2015-01, and basically they're reducing the annual mortgage insurance premium effective January 26th. That's going to save home buyers about $80 to $100 on average on their monthly mortgage payment because of the reduction of 0.5% on the annual mortgage insurance premium. So that is great news. Now, if you have an FHA loan that you've taken out since 2011, you might want to look into an FHA Streamline Refinance. It could save you hundreds of dollars because A, you're probably going to drop your rate. Rates are at record lows. And B, you're going to lower your monthly mortgage insurance premium because it takes effect January 26th on all new loans, purchase or refinance. So if you want a no-cost analysis on that Streamline, give us a call, 410-412-3319, or apply online, PRMILoanApplication.com. Now, in the local news, the next free homebuyer seminar is this Wednesday, January 14th. That's in Laurel, Maryland. That's from 6 p.m. to 8 p.m. at the North Laurel Community Center. And then we have one this Saturday January 17th. That's Saturday 10 a.m. to noon, and that's in Frederick at the Urbana Library. And then the next one in Towson is Saturday, January 31st from 10 a.m. to noon at the Sheraton Baltimore North Hotel. You can register for either one of those events. Give us a call, 410-412-3319, or online, www.marylandhomebuyerseminars.com. Look forward to seeing you guys next week.